Yeti. Good morning. How's everybody doing? Hello, Helen. We can get this going. Having to shut down this annoying Microsoft pop up in the corner. Doesn't go away. So it's a little frustrating. I'm not a fan of being forced to look at something that I don't want to look at. Most people aren't. So anyway, welcome out to Trading Coaches Playbook. We're going to start it off right. That's right, with a cup of coffee. It's only number 3. I'm going slow this morning. Let's get right to it. I think I've got a little bit to cover. We'll see how much fun we have. But I am not a registered broker dealer investment advisor. I'm not going to give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading. How we doing, Kevin? Hopefully all is well and you guys are having fun. This market's still seems a little bit schizophrenic. I don't think we're quite in a normal back to relative normal, relative being the key word. I mean, the market's always seems a little bit schizophrenic, or maybe that's just projection on our part. I don't know. It's one of those things, right? But last year was a little bit wild. It wasn't quite what we expected, but it was still overall, it was still good. It's trading's always challenging. Last year was just a little more challenging than most times. So, but here's what we got coming up. Inner Circle, the quarterly ones, January 19th and 20th at 10 a.m. Eastern time. Check-in is the 22nd and the 29th, both at 7 o'clock Eastern time. Mastermind group is 23rd and 30th at 8 o'clock. Monster Market Movers, the 24th at 8 p.m. Trading You, the 31st at 8 p.m. and also February 8th. That should also be at 8 p.m. I don't think we've ever done a Trading You at another time. At least I haven't. So I can't remember if that's the one I'm doing or not. But and then Power Option plays every Monday and Thursday. Covered Call Explorer Thursday with Trip, and Power Hour every Monday. Trading Coaches Playbook every Friday at noon. And then Crush It in 2024 with Rob, the 24th, 25th, and 29th at those times you can see. And then E-Mini Think Take with Brandon Monday, Wednesday, and Thursday. Assuming no questions about that. Whoa, what just happened? Interesting. Wow. I don't know what I just hit, but it took me to, oh, that's it. Oh, that's funny. These are all hyperlinks. I clicked right here and it took me to the website for Crush It with Rob. So these all got hyperlinked. Interesting. At least those ones did. Well, I didn't. That was interesting. Click out there and there we go. That was a first. So you can find us on all those social media places. And then if you haven't had any of my stuff, there's what I've got. Patterns in a Flash is all about technical analysis, right? I'll probably touch on a little bit here and there. Weekly Whispers. That is something we launched last year. First of last year, I made some changes, and I don't know if we call it, definitely additions this year. Just trying to improve, always trying to make things a little bit better and add in a little bit more to it. Actually, a lot more to it, because every Thursday I do my research, looking for my candidates. And I only do it once a week. I don't go every day hunting for candidates. I go once a week looking for patterns. And then those are the only trades I watch during the week. I mean, unless obviously if something pops up during the week, then I'll look at it. But for the most part, that's all I do. I don't spend all day, every day searching for stuff. I'm just watching and managing those trades. I usually have about 20 to 30 candidates every week. That's all I do for the entire week until the following Thursday. Then I go back and research. Sometimes some stay on there. Sometimes they go away. Sometimes there's new patterns. But yeah, I've added a few little things to it this year. And normally I try to keep them about an hour on the Thursday recordings. But last night I went almost 2 hours. So I added a lot more stuff than I realized. And it's mostly just some of the adding the options choices and stuff to the recording. So if you have Weekly Whispers now, it's a long one that you'll get sometime this morning, because I record them Thursday night, get them off to the tech team late Thursday night, and then they upload them Friday. Usually you get them 9 or 10 o'clock. Like I say, you're usually there an hour. I'm trying to figure out a way to, because the last couple I did were an hour and 20, hour and 30 minutes. So I've added enough stuff that it's added quite a bit. I'm trying to figure out a way to parse it down and split it up into sections so that you can go watch there's one of 4 sections, actually. There's 4 different pieces I've broken it into. So I'm hoping we can get that figured out to be able to do that. So we'll see how that goes. If not, I got to figure something out. So, and then small account, big returns. If you're working with a smaller account, there are certain things that you can do and adapt to improve your chances of success and growing that account to a sizable account. So that's the ultimate goal, right? Kind of. I'll touch on that in a minute. Just out of curiosity, hello, Brenda. What is your ultimate goal? Just curious what you all are here for. I'll give you a minute. We're not in a huge hurry, I don't think. Kind of, because I always have more material than I have time, more stuff I want to talk about than time, but awesome. Those are good. To make money consistently with limited time and financial resources. Steady growth. We'll learn to be a skilled trader to make a living from. Learn how to trade and make money. To prove to myself I can do it. That's a heavy motivator, isn't it? So I'm not gonna try to shift your paradigm, but if you want to, not necessarily shift your paradigm, but I mean a lot of our goals, and if we haven't met, if I don't know you, I teach from peer experience. I started back in 2000, right at the height of the dot-com bubble, right when it started. Like the largest intraday drop, at least I don't know if it still is or not, but in the Nasdaq's history, it was 600 some points back when it was at 1800 or something. I don't remember what it was, but it was huge. It was a 20 or 30% drop intraday. That was the day I was sitting in my first workshop. So I learned in an excruciatingly difficult market, especially when the previous 5 or 6 years had been massive bull runs and everybody was buying the dip, buying calls, bullish, 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 bullish. And so everything, every coaching, every learning thing was all geared towards a bull market. And nobody, I can't remember a single person talking about preparing for a bear market or being ready for this thing to turn around. And I was young and dumb, didn't have a lot of money. I had to scrounge up some money to trade with. And 6 or 8 months after I started learning, I threw $1,000 in the account, and 2 months later, it was gone. Right? I put it in 2 options; they both expired worthless. It wasn't much fun. Right? It was a little bit different ball game then, because starting with $1,000 was significantly more challenging, considering the cheapest commission I could find was $75, not cents, dollars. Today it's 75 cents. 24 years ago, it was $75. That was in one way, right? So you have $1,000, you do one trade, you buy one $5 option, you're out $575. And then you got to pay 75 to sell it, which means it has to go to $6.50 just to break even on one contract. Today you can do one contract, and if it goes up 75 cents, you're making $70. So it is, I don't want to say it's far easier, but it is to get started today with regard to the expense and the cost of trading. The trading itself is still difficult. It always will be. But as far as getting started with smaller amounts of money, it's significantly easier now because your expenses to cost is like 99% less. Improve consistency, wins versus losses. That's good. To be financially stable, for daily cash flow. All good goals. At the same time, the one thing that I notice that y'all notice, and I was focused on too, is the money. And in my opinion, that is the not necessarily a good place to be, because when you focus on the money, a lot of times you'll make a foolish decision. Have you ever done that? You're watching your profit or loss, and you're like, and then oh, it's getting worse, and you panic out because you don't want to lose anymore, or it's going in your favor, and it starts to tick back. Right, you're up $500, and then all of a sudden you're only up $450. You're like, you freak out, and so you get out with your $450. You're all excited until 2 hours later when the trade runs and you would have made $1,000 instead of only 450. And now you're mad and angry because if you've sorry. No, Kitty's trying to drink my water again. Yeah, there you go, Brenda. I was waiting for you to say something. She always wants to be the center of attention. Usually she's sitting up there on the router, but so yeah, I think if you shift, well, we'll get to that. I'm getting a little ahead of myself. She better not be thirsty. She's got a giant thing of water out in the other room with a filter and everything. It's all fancy and good for her. So, but for some reason, she likes to drink out of my cup. I don't understand it. Can't figure it out. So maybe she likes to share. But you're talking about the APCs and 1, 2, 3s, not the PBs, but APs, right? We're going to go back to first grade. Not really, but so number one is attitude, right? It's 1A, right? So we have 1A, 2 Ps, 3 Cs. Your attitude, really, trading is about mindset. It really is. When you peel away all the other stuff, okay, and you can be the greatest technician on the planet, you can be spectacular at reading charts, you can have the best strategy on the planet, but if you don't have the right mindset, the right attitude, ultimately it's going to end. So that is step number one, is making sure you develop the proper mindset. 2 Ps, plan and process. Okay, so I'm assuming some of you probably work, you still have jobs. Nothing wrong with that. In fact, it's good in a lot of ways. What you may find, because I saw something limited time. Tim said limited time. That's not a bad thing. Actually, it will probably work to your benefit. Because if you sit and just stare at the screen, that's when you start to make those foolish decisions, unless you've gotten to a place where you can manage your mind well, right? So if you're not sitting there staring at the screen and you're at your job working, that definitely can be a huge, huge plus. So don't think that it's a bad thing and it's costing you money. But most likely, if you have a job or you've ever worked at a job before, which I'm guessing probably all of us have, there's always a plan and there's always a process. And trading is no different. It's a business like any other. You've got to have a plan for the business and you've got to have processes that allow you to do things efficiently so that it leads to profits. And when you have a solid plan and you have good processes, that ultimately should result in profits. Should be in the key word, because part of it is you got to stick to the plan and you got to stick to the process, right? Just having is one thing. Sticking to it, it's a different. And that's the hard part of trading, right? Because it's an emotional place. That's one thing. Just as a side note, I hear people say all the time is that, earnings drives the market or news drives the market. And it's like, that's only half true. The real truth is that the emotional reaction to the news or the earnings is what drives the market. People's emotions drive the market, pure and simple. That's what makes it challenging. And that's why it's important for us as traders to focus on our mindset, because that's what drives the market. And if your mindset's not in the right place, you'll make bad decisions, right? The 3 C's, calm, cool, and collected. And this is where I would suggest, and it took me several years to get to the place, because I was in the same place where, I want to make this amount of money and I want to make this amount per day or this amount per month or this amount per week. And it's not necessarily bad to have that. The thing that I found challenging is that when you set these goals, if you don't hit them and you're disappointed, then that's going to affect your mindset. And a lot of times what it will also do is, well, I got to make $5,000 this month. So I'm going to take this trade on because I have the potential to make 3,000 on that and 3,000 on this and 3,000 on this, and that will get me to 5,000, right? So you start making decisions based on those goals of hitting this number and not necessarily on making a good trade. So when you focus only on the money and when you make a money goal and you set it, and especially I think if you set a time limit on it, say I need it this month, then it skews your ability to see things for what they are, because you're focused on this goal over here. And in certain things in life, goals are great. And it's not that it's bad, but if it skews your ability to make good decisions, then it's bad. Right? If you start a business and you have a goal to hit $1 million of revenue, that's one thing. But if you're in an environment like this, where you don't know what's coming next, and in reality, any business is like that, right? You don't know if you're going to be able to get to that point. And sure, you shoot for it. But if it skews your decisions in a negative way, that's a major problem. And that's what happens to most people in trading. And after several years, probably a decade actually, I finally realized that my goal shouldn't be about making money or having certain targets to hit in a certain time frame. I just wanted to get to a place where I could trade in a calm, cool, collected fashion. Because when you're not calm, cool, collected, you make bad decisions, typically. Not always, obviously, but when the emotions crank up, that's when you're making foolish decisions. Has anybody ever thought, well, because you make a decision in emotion and then you're like, ah, and then afterwards you're like, why did I do that? You literally, I mean, I can't tell you how many times I've done it. Where you pull the trigger and almost immediately like, what was I thinking? Why did I get into there? And it's not a good place to be. If you can get to where you're calm, cool, and collected, the goal should be to minimize your mistakes. And you're still going to make them no matter what. Almost 24 years in, I still make mistakes, but they're far fewer today than they used to be, mainly because I'm at that place where I'm calm, cool, and collected. I'm not worried about my trades. I sleep fine at night. I pretty much always have, but I don't think about it. There's a lot of people I've talked to dozens, if not hundreds of people over the years that they can't sleep at night because they're worried about what's going to happen in the market tomorrow. If that's where you're at, you have too much money at risk. Plain and simple. You need to scale back to where you can sleep at night and you're comfortable and you're not worried about what you're going to lose, right? So, in my opinion, I think if you focus on getting to the 3 C's, you will find that the money will be a natural byproduct of that. You get hives holding overnight in this market. That's kind of funny. You shouldn't, but well, yeah, no, it shouldn't. Woulda, shoulda, coulda, right? See, I even catch myself. Woulda, shoulda, coulda is a dangerous syndrome. It's a bad syndrome. It's something that you should train your brain to recognize when you say one of those 3 words and catch yourself and go, no, because it's easy to get into that mode, right? The main reason that mindset and having a good attitude, a good mindset, is the deck is stacked against you, right? It doesn't work in your favor. The market is not designed for you to profit long term. It's designed for, well, I guess you could say it is. Some people say it is. As a trader, though, especially as a short-term trader, it is a transactional place. And the brokers and everybody, every middleman, you got the brokers, you got the market makers, you got the money managers, you got all the, I mean, you got a multi-trillion-dollar industry, and their job is to make money off of it. Whether or not you make money is not their concern. It's all transactional. But it's stacked in against you in other multiple ways. And here's mainly what I mean. Let's say you're trading, it's not a zero-sum game, right? If you are trading, there's why my chair is destroyed. If you buy an option, right? You buy a call option, delta of 70. If it moves in your favor by 70 cents, you have slippage, right? You have the slippage between the bid and the ask, you have commissions, you have expenses. It costs you money to place that trade. So if it goes up $1, you make 70 cents theoretically, but in reality, after the slippage, you're only making 55. If it goes against you by $1, you're losing 70 cents theoretically based on the delta, but you still have the slippage, which 85. So if it moves one way or the other, the exact same amount, you're losing more than you make. That's not a zero-sum game. That means if you trade, you make $1 on one, you lose $1 on another, you're actually losing more. You're going to lose in the end, long term. So the deck is stacked against you. So how do we stack it in our favor? And it's really not as complicated as you may think it is. You have a plan, right? And you put processes in place. And we're going to try to get through this, and we'll spend as much time on charts as we can. Risk reward. I know I see some familiar names here that I've seen this and understand what it is. But risk reward, if you haven't seen this, the way I show it, and before I go, I want to qualify this. My trading style, I'm buying calls or puts. I'm a directional trader. I'm not doing spreads. I occasionally will do one here or there, but I am a directional trader. So this is mostly for that, not necessarily for spreads. Spreads got a little different, it's got a different risk reward profile. But conceptually, you can still use this. If you're a spread trader, you can still use this concept in your spread trading. But there's a question. Some of y'all know this. Give me a yay or nay, or who would love to have a 95% win rate? That would be special, wouldn't it? What if you only had a 30% win rate? Could you live with that? Because let me ask you this. Okay, you have a 95% win rate. So you've done 100 trades. Let's say in the last 3 months, you did 100 trades. Those 100 trades, you won on 95 and you won $1. And on the 5 that you lost on, you lost $100 on each of them. For all of you that said you still want a 95% win rate, how many of you want that now? You made $1 on 95 trades. You made $95 and you lost 100 on the other 5. You lost 500. You're down $405. But you can brag. I got 95% win rate. Woo! I'm still getting crushed. And the sad choice is that is the way most traders start out. Focused on a high win rate and believing falsely, which I did too. Again, I teach from experience. I used to believe you got to be at least 50% right. Otherwise, you're not going to make money. I remember over and over thinking, if I could just get to 70, if I could read the charts good enough to get to 70, 80%, I'll make a fortune. And I couldn't have been more wrong. The win rate means virtually nothing. How many of you know somebody that got into something and it rocketed to the moon and they made $3 million on one deal? Then they have 3,000 other deals that they lost $5,000 on. They're still up $1.5 million. 1 out of 3,000 is a tiny percentage. The win rate means nothing. It's the size of the wins versus the size of the losses that is important and critical. And the reality is, and you learn this when you get deeper into technicals like I have been. That's where I've been 24 years. Is I love charting. The professionals that go out and create, I'm drawing a blank on the word. What is it? The trading systems, the static trading system, they're all basically mathematical, right? They put these mathematical formulas together, they put them in there, and they go back test them, and you do this, and you do that, right? And there's lots of different ways to do that. And it can be advantageous, right? It's just, you're getting really deep when you get to that point. And it's not necessarily, for me at least, it doesn't benefit me. I've played with it a little bit. If you go back test a specific strategy of getting in and getting out at certain times, and this happens, if Stokes cross and MACD crosses and this happens, then you get into a trade long or short. Anything above a 70% win rate on a, gosh, I can't think of it. What's the term for it? It's not not mechanical trading, whatever it is. Anything above 70% is suspect. Because you've got to, when you're back testing those types of systems and you're going back in history, you have to use different times in the market. I mean, if you go back and you test something just from 95 to 99 and you have a bullish strategy that's built into the system, you're going to have a massive win rate. If you don't account for the bear market, the dot-com bubble of 2000, then your system is completely skewed. It's only based on a certain market condition. If you don't account for every different market condition, then your system is, and I see people on Facebook throwing these out there, we got an 85% win rate. Anytime I say anything above 70, anybody says they're making better than 70%, as far as I'm concerned, it's out. Because it's very difficult in every condition of market. And you can have a 95% win rate for a period. But what happens when the bear comes out, right? If you're in a bull market, yeah, you can kill it. And that's where a lot of people, there's the old saying that says, don't confuse brains with the bull market. So you've got to be cautious on the win rate. Now, granted, there are some nuances. Like I said, with spread trading, if you're doing spreads, with spreads, you're walking in with about a 70% chance of profiting. So you can have a really high win rate with spreads. So there's a lot of different nuances. So even though I'm kind of making a static blanket statement, there are variables that can factor into that. But if you go back and look at actual, I'm still drawing a blank on that word, whatever it is. Those types of systems, mechanical systems, anything above 70% is suspect. But here's the beauty. You don't need to be 95%. You can be 30%. How many would like that? I love it. Love it. Here's why. I'm going to show you exactly how this works. This is just pure conceptual example. We're either making $3, right? A risk reward. You should all be familiar with that. $3 of upside, $1 of risk. So we either make $3 in the trade or we lose $1. One of the two. And then we'll keep track of the win rate, the percentages in the far right column there. Percentage of win-loss, right? So the first trade you do is a loser. Oh, this thing's not working right. No, it's supposed to come out on the right side. So trade number 2 is loser. So you're down $2, right? Trade number 3 is a winner. You make $3. Trade 4 is a loser. Trade 5 is a loser. Trade 6 is a loser. But trade 7 is a winner. See, those were supposed to come out together. But you can see the win-loss. The first one is 100% loss, 100%. Trade number 3, you're at 33%. But you're profitable by $1 right here, right? Trade number 4, you break even at 25. 5, 6, you lose. By trade number 7, you make $1 profit on, you're back to net profit. Net profit of $1, yet you're only 28%. 28%, 2 trades out of 7. You made $3 on 2 different trades. That's $6. You lost $5 on the other 5 trades. That's a 28% win rate. Yet you're still profitable. I know some of you are scratching your head going, wait a minute, that doesn't make any sense. That can't be true. Just go do the math. It's simple math. 2 winners for $3, that's $6. 5 losers for 5. It's no different than 95 $1 winners and $500 losers, right? And honestly, that's where most people start out. I did too. You cut your winners short and you let your losers run. So you have these giant losers and a whole bunch of little winners. It's the opposite of what we need to do. And that's where this comes in handy. And it will absolutely, Will's not here, is he? Every time I show this example, he's like, it absolutely changed everything I did. And the biggest thing, getting back to this right here, imagine if you stopped focusing on trying to get a huge win rate. Imagine if you could sit and realize, and it'll take you a little while, if you start pounding this concept into your head and you realize, I don't have to be right that often, it gets you to a place where you're significantly calmer, cool. You're like, I don't care what happens. And for me, it was a dramatic shift. When I first saw it this way, and I don't remember, it's been several years ago. I don't remember where it came from. If I just stumbled on it, if somebody showed it to me, I can't remember. I wish I could. Because if somebody showed me, I want to give them credit. But I still had, and now that I look back, I realize I was winging it. I used to think I was good at planning trades. And I had a good, everything was wonderful. I was doing okay, even though I wasn't doing that great. And then I saw this concept. I decided I'm going to implement it. So I had some trades over here where I was looking back now, I know I was winging it. And then I had other trades over here that I had implemented a 3-to-1 risk reward on. And I remember I put 4 on. I think I had a couple over here. And I remember thinking, seeing this concept going, I got 4 trades on where if just one of them goes in my favor and the other 3 go against me, I'm okay. If I just hit 50%, I'm going to be killing it. If only 2 go in my favor, I only need one of them to work out to be okay. And all of a sudden I was like, wow, I wasn't even concerned about these trades over here that I had the plan on. I was nervous and anxious, had some hives over here with this one. Right, Brenda? Where these ones over here, I was calm, cool, and collected. And that's when it dawned on me. It just hit me like a ton of bricks. Like, wow, that's where I need to be on every single trade. And now I won't place a trade unless that 3-to-1 is there. And I have the 3-to-1 odds. I will let it go. If it is going, there's what was it? Just last week, there was one from last week. Ally, a bank. It was already below the entry point. I just left it and kept on tanking. I don't know where it's at today, but it's been down the last several days. I'm like, and it's frustrating, but I've learned the hard way that if I don't have the risk reward in place, because I've chased those before, then guess what happens? It turns around, then your reward or your risk is so much bigger than it should be. So if you implement that and you focus on getting to a place where you're calm, cool, and collected, your trading will most likely completely change. Anybody having a hard time believing the risk reward thing? I can show you. Perfect, Tom. This is, I think, the last slide. Let me finish up this, and then we'll go look at charts, and I'll address that question in a minute. So, one thing that's important is to constantly assess your risk. Are you comfortable with the amount of risk you have in the trade? If you can't answer that, yes. If you can't look and say, here's my account size, here's how much I have at risk in this trade. If I'm not okay with giving the market that amount of money, I'm going to get in here, and if it goes against me, if I'm wrong, which is perfectly fine, you're going to be wrong at least half the time. Because it's a coin flip, right? It's a 50-50. If I'm wrong, how much am I willing to give to the market to find out if I'm right? And you look at it and say, well, I've got, if I enter at this place and I get out here, it's going to cost me about $1,000. I don't want to lose $1,000. Okay, I'm not comfortable with that. How much are you comfortable with? Okay, 500. Okay, then cut your position in half. Maybe you're putting stops too tight. You're getting stopped out a lot, right? You get in, you put a really tight stop because you only want to take a certain amount of risk. Maybe you're doing 10 contracts and buying an option at 5 and putting a stop at 450. Okay, you're comfortable with $500 of risk, but you're getting stopped out constantly. Well, your stop's too tight, probably. So maybe instead of doing 10 contracts, you cut it down to 5 and you put a stop at $1 instead of 50 cents. So you've got to adjust it based on what you got to take the feedback the market's giving you and say, okay, I'm getting stopped out too much. My stop's too tight. Let me peel back the position size and put a looser stop on it. So then my ultimate, if I'm comfortable losing $500, giving the market $500 to find out, then I have to adjust this, right? It's all like I was watching a comedian recently, and he says, well, you get, I think it was Foxworthy, actually. It was some documentary, some interview that he was doing, and it says, you get feedback from the audience. When you get a big laugh on a joke, okay, you take a mental note that that's a good joke. Let's keep using that one. Put that one in the arsenal. If it's a dud and nobody laughs, okay, kick that one out. They're getting constant feedback from the audience. And trading's the same way. You got to take constant feedback from the market. Okay, this is happening to you. Why? My stop's too tight. This is happening. I'm making an emotional decision. Why? Because you have too much at risk. You're not comfortable risking $1,000. That's why you can't sleep at night. You have too much risk on the line. So cut it back to where you're calm, cool, and collected. Cut it back to a risk place that you're comfortable with. This is something we all do, right? Stop focusing on profits. Profits will take care of themselves. Traders that make it long-term are focused on risk. Absolutely 100% focused on risk. Capital preservation, maintaining and managing your risk. The profits will take care of themselves. You will have those trades that will take off and run big time, and you'll make a killing on them. You don't know when they're going to happen. You're not sure where they're coming from, but they will happen. And as long as you maintain your risk and you keep your capital intact so that you can be there when it happens, because you don't know when it's going to happen. It will, but focus on risk. And it's really, really easy to get focused on profits because, y'all said your goal is you want to make money, right? You want to make money, want to make money, want to make money. If that's all you focus on, you're going to make bad decisions. And I've done it. We all do, right? It's part of the nature of the progression of getting to where you want to be trading. If you focus on risk and forget about the profits, then you will get more to a place where you're calm, cool, and collected. Every question should go back to the first one. Am I comfortable with the amount of risk I have in this trade? And if you have 3 times as much upside, if you're risking 500, then you make 1,500. You do 4 of those trades and 1 goes in your favor and 3 go against you, you're still break even. Yet you're 100% focused on risk. And let the profits take care of themselves. This is something that I just kind of realized recently is that what separates a pro from an amateur? When you look at sports, especially, right? I go to baseball a lot because it's a lot like trading, right? It's kind of boring and monotonous, and it's not a whole lot of fun to watch. Even playing it, it's like, you just sit there in the dugout most of the time. It's not a high action sport, right? It can be occasionally, but 99% of the time, it's just like mundane and you're just going through the motions. But you notice when people go up to bat, right? When professionals go back up to bat and they strike out, they don't freak out and throw a fit and they don't panic and right. Sometimes they do, but if it's an intense situation, but most of the time, what do? They just go back to the dugout. They grab their glove and they go back to defense. They go play defense and then they wait for the next at bat. It's just part of the deal. You're going to strike out sometimes. They know they've got 160 games a year, approximately 4 at bats every game. You got 800-900 at bats in a year. One of them is not that big of a deal. If you strike out one time, who cares? Come back and focus on the next at bat, right? And in trading, the biggest thing, and most professional athletes will tell you this, is it's mostly about your mindset, right? I mean, sure, you got to have the physical skill and you got to have the practice and the training and all that, but it's mostly mindset to get to that level, right? There's a lot of really talented college athletes. In fact, I used to work with a guy that one of his good friends, golfing buddies, was a scratch golfer. And he went out and tried for the PGA. And all of a sudden, there's all these people around, there's cameras and all this pressure on him. And he lost his ability to play good golf because of the pressure. And all of a sudden, he played terrible. And the difference between the pros and the amateurs, the guy that goes out on a weekend is relaxed and calm. He's calm, cool, and collected, right? It's just a play game. We're just having fun. Great golfer then. But when the pressure's on, and when you can bounce back from defeat in trading, you're going to have a lot of losses. And what you've got to do is get your mind right and go, okay, first, you got to process it in a healthy way. Did I make a mistake? Or did the trade just not work out like I expected? And that's the first question that I always ask is, did I do something stupid? Did I make a bad decision? Or did things just not work out? And if the answer is, okay, I planned the trade, I did everything right, made a good decision, it just didn't work out, I'm going back to the dugout, grab my glove, and go play defense. I don't care. It's just another at bat. I got 600 or 800 more to go. I'm not going to worry about that. If I can look at it and say, okay, I did this, that was foolish. I shouldn't have done this. I made this decision based on emotion. I did this. I didn't do this. I didn't adjust. If I can see a mistake, then I just look at it and go, okay, this was a mistake. Log it, correct it. Don't do it again, or at least try not to. And then go back to it. Go back to do what you were doing. You got a plan and a process in place. Just keep doing what you've been doing. And if the plan is good, the process is good, and you're doing it right, and the odds are on your side, you should be profitable, right? Simple. Trading is really not complex, but it is definitely not easy. It's simple, but not easy, right? And this is something that I don't know where I came up with this years ago, but it's somebody said something, and I was like, I'm a terrible quitter. I don't do well at quitting. So, one of the things that you will find is that trading is, you probably already figured it out, is trading is very difficult. It's not easy. And you have to keep pushing forward. Just like, and that's the other thing too, I've thought about this recently, is that when you look at professional sports, go back to baseball, most of the people in the league started playing when they were a kid. They spent 10, 15, 20 years mastering the skill to get to the level they're at. Not very many traders pick it up and within a year or two master it to a point where they're killing it. It takes time. You've got to get in the trenches. You got to take the pitches. You've got to take the, at bats. You've got to do all that, right? You got to do all the work. And the biggest thing though is the mindset part. So, all right, it's a good day so far. I'll show you that in a minute, but let me answer Tom's question. How do I use stops? Does anybody want to have a little fun with the risk reward thing and see if it's real? If you do, let me know. Somebody give me a ticker symbol. because all the ones I have here, I already have a plan. So I want to go start. Not that one, Brenda. A real ticker symbol. Ticker symbol. Okay, that's better. Even though I'm not a big fan of that thing. It's okay. I'm gonna start fresh, actually. I'm gonna get rid of it. It needs to be anyway. So there's Amazon. So I'm gonna show you, Tom, right now how I use stops, or how I set stops, I should say. And how you, I guess it depends on how you use them. How do I set them? How do you use them is, well, there's a little bit of variable there, but I'll just go through the whole process, since we got a process and a plan, right? So there's Amazon. I always do the charting. There's weekly. I always start off with a clean slate. Go look at, if I can see the entire history, which this stuff back here isn't relevant anymore. I'm really only looking to see what's relevant here. So I go to a weekly. I'll draw the major, what I see as the major support and resistance lines. And I'll usually start with a line chart, draw it, and then adjust it according to the intraday or intra-week. This is weeklies, you can see up here. So it's going to be a little bit different than today, but that's definitely a major spot there. You can see hits here. Intra-week, they hit here. So much like on a daily basis, they came down and hit there at some point. That's a major spot, 144. This one we're at looks like it is too. Actually, maybe a tad bit higher there. Support, little head and shoulders. Beautiful head and shoulders. So I love patterns right there. Head and shoulders neckline, 159 breaks it, takes some profit. It does it again. I mean, there's just, it's endless. There's an inverted head and shoulders right here. Anyway, that's another story. I don't have enough time for that. So we go back to daily. Let's see what we have here. So there's our two major support and resistance levels around where we're trading at, right? I could draw one up here. I could draw one down here. It's not relevant to right now. And if you haven't noticed, I'm a little ADD, so I try to keep the lines on my chart to a minimum. I don't want too much on there. It clutters my brain, clutters my mind, and I want to have a clean, nice analysis. So there's a little bit, look at the, I don't know if there's anything right where we're at. There's a little bit of support kind of in this area, but I'm not going to worry about that. It's just kind of dancing around here. Yeah, I don't see anything right now. You have a bunch of, I'm going to look at some of these other ones other people brought in. There's nothing, I don't see anything there right now. It's just too, it's right in the middle of the range. So CMG, holy cow, this thing's at 2,400. Crazy. I remember seeing this when it was at like 250, 300. And I'm like, that's crazy. They make Mexican food. It's delicious. I like it. I go there when I can. But it's like, really? $2,000 stock? But it's because they have a super low float, right? There's not a whole lot of stock out there. So the price is really high. And it seems to be a good company. I'm not sure if that's, yeah, that's, well. Okay, this isn't too bad. So there's a little range here, basically. So this is where I'm going to use it. Consider we're at this resistance level. So I typically won't place a trade in the middle of a range. Amazon was in the middle of a range. I don't see any potential trades with that. This one, we're up at least at a resistance level. So I wouldn't, and this is today. It's a little bit delayed, right? Today's the 19th. Yeah. So this is today's candle. I wouldn't place a trade on this, but we're at the very beginnings, possibly, of a double top. If it rolls over from here and does this again, then we have a double top pattern. If it breaks this midpoint, then it's confirmed. If you don't know that, that's what you'll learn in Patterns in Flash. Is not only how to identify the patterns, especially before they happen. Because yeah, we're at the very, like I said, if we roll over from here, we have a double top that's formed. It's confirmed once it breaks this point right here. So trading off of this resistance level is very aggressive. But for example's sake, I'm going to say that we're going to trade this. We're going to trade it from here down to this support level, which isn't bad. It's just, it's aggressive, right? It's not, there's no confirmation the pattern's going to hold. So going back to Tom's question, how do I use stops? I'm going to talk about how I set stops and then how to use them second. I set stops based on the price chart. Some people use percentages. Some people use, there's no right or wrong way to do it. Just the way I do it. I look at this and say, okay, this is, I think it's an all-time high. This is the recent high. This is the high that we have for the resistance. We've hit it a couple of times. You got a hangman and not quite a bearish engulfing pattern, but, and then not a shooting star, but kind of close. So these are three bearish candles, which have all tested this area. So I'm going to put a stop above that level. Say, okay, if I got into a bearish trade on this stock and it breaks back above that resistance, at what point am I no longer confident in the bearish move? At what point will I acknowledge that I'm probably wrong? And if it gets above the highs, even just a little bit above the highs, I'm going to acknowledge that, okay, I'm probably wrong. Because if they break out to highs, it's probably going to keep going. So I would put a stop just above that level right there. And then the target would be right down here, just shy of the actual support level. That way, if it doesn't quite get all the way there, I cash out, I'm good. Now, what you can do from there is, where do we go? Oh, we need that. Inside patterns of flash, I think it's a weekly whispers. There's a risk reward calculator there where you can punch in the numbers. Right? I'm going to show you the easy way to do it, especially if you have Omega charts. You go, the stop is 23.59.70. Target is 22.18.18. So the entry point is 23.24.32. Where's that at? Somewhere 23.23. Close enough. Well, that's not, but so you can do it this way. That's the way I used to do it. And then I discovered this tool in Omega charts where you can just you have this tool where it does everything. So then I'll just put my stop. What I put it at 23.50 something. I think it was, I'm just going to put it right above there, and it draws the other lines automatically. Right. I can go like this and adjust it down a little bit. So this does it automatically. I don't have to worry about going and calculating everything out. So I've got the stop slightly above the previous highs. So if it breaks out and stops me out, I'm out of there. I'm going to just take my loss and move on. If it rolls back down to the lower end, there's my target. And this will calculate and tell you how much profit potential there is at 105, which means there should be, okay, that's close, 106, $35 a risk. So if you did 4 trades on this, let's say you pulled the trigger on 4 trades exactly the same, you're going to lose $106.14. If 1 out of 4 times it works out, you make $106.14, you're break even. You only have to be 1 for 4, right? That's the beauty of this. And now you can just relax. It doesn't matter if I'm super right all the time. How far above for the stop? 1 average true range. If that works for you, yes. Honestly, I don't have a static way to do it. I just literally eyeball it. Which, if you're an engineer type, I'm guessing you might be. I kind of am. I used to be more that way. Now I'm a little more chill about it. It's like, do I have to be down to the penny? No. In fact, I think Steve Nissen said it best. Your support and resistance lines, trend lines should be drawn with a crayon and not a pencil. So if you're the engineer type and you're getting it down to the penny, the things have a range, right? They bounce around. It's not one of those things that. So I've relaxed the rigidness I used to have. So, yeah, I mean, if you want to, if like I said, if you want a way to figure that out and do it that way, go for it. I'm not one that says you have to do it my way. If this is the best way to do it, there's good principles, there's good concepts to follow, but it doesn't mean you have to do it exactly that way. So I tell people, do what works for you. If it's working for you, keep doing it. I mean, I trade differently than a lot of other people do, but it works for me. So if it ain't broke, don't fix it, right? I'm not going to mess with it because it's working for me. So why would I change it? And it took me a long time to get to a point where I figured out the plan, the process, and getting to a place where I'm calm, cool, and collected. So that's the reason I do it this way. That's what I just did is literally all I do. And you can see here's the list that I have this week for the Weekly Whisper subscribers and every single one of these. Here's Apple. There's a double bottom. It's breaking up. Actually, that might be filling here any minute because that's it might already be filled. It's taking off to the upside. What was the other question? Oh, so what do you call this tool? It is advanced risk reward. So if you have Omega charts, it's this one right here. Something just hit. Oh, PayPal's still rallying. I draw. Yeah, if you find it. So all you do is, well, click it first of all, right? And then you have to activate it. And then all you do is grab it. You'll have to play with it a little bit because it's a little bit wonky as far as how you draw it. It took me a minute to get used to it. But it'll be different. The default one looks different. you have to go in, single click it, and you'll come in here, and you have to change these numbers to get the ratios and stuff right. Right. And there's a bunch of different things you can change. You can change the colors, you can change the styles, but this is where you want to get, you want to have basically $4 of upside for $1 of risk. And then that drops your entry point at a 3-to-1. It's just math. You'll have to probably crunch the math a little bit. I had to. And then you can change how it looks and where you want it and all that stuff. So, and then you hit, once you get it how you want it, you hit save as default. So play with it. I mean, you just have to play with it. That's what I had to do. I found it last year. It saves me 20 or 30 minutes every single week in having it. You saw me do the red, green line and then that, and having to calculate on the spreadsheet, which is how I used to do it. I used to punch everything in. Now I just draw it once. It's done. It all calculates it for me. I don't have to go punch in. I don't have to use a spreadsheet. It's beautiful. So if you have Omega charts and you like that tool, start using it. Like you see, there's AEP. That one actually triggered this morning. All these ones I have checked are ones that I've placed trades on. And here's where we're at. Did it hit yet? Nope. So this is the Weekly Whispers account. Just started in January. So banked about $4,000 of profit and up right now about a little over $3,000 in the trades that we're in. So here's the trades that are in. And these are all, I just take the Weekly Whisper ones I put out every week to people and put trades on. And if they hit, they hit. I just put most of these in this morning. There was about 5 or 6 on this morning. And here's all the working orders, right? You can see them all up here. It's just, you can come up here and click these and it'll show you, it'll have the boxes. So it's a little easier. You can adjust these size-wise. I put them up in this other monitor, so they're up here. But so I've got a whole bunch of orders out here sitting, waiting. Like there's Apple, right? I can double click on it. It'll go to the chart. I'll move that up there. Get it out of the way. That need to shrink that down a little bit. So there's an order right now on Apple. If it hits 190.72, I'm gonna pick up the stock, right? Which this is a killer system. And the thing that I love about it most is that you can come in and hit reports and you can get a report. This is why I use this. It tracks all the data, shows the total net profit, number of trades, winning percentage is 65, which that is not accurate necessarily because I scale out a lot. So, and there was, what's the one? The gap's still in. So here's the gap, right? This is the one this was last week on last week's Weekly Whispers. Basically a triple top. Looking at if it breaks down, I just draw the plan, right? You draw the resistance, draw the stop slightly above there. The target's down here. The tool automatically draws it right there. My entry's 2069. You can see right there. It actually gapped down a little bit. Right? It didn't get filled till 2047, so I didn't get a great fill. But there's 1,000, right? It's shorting it, which is mimicking buying puts. Because this system doesn't work with options, unfortunately. I wish it did. And I got a hold of somebody at the developers, and I asked them, will it work with options? And he's like, no, it's not set up for that. So I have to use stock mimicking options trades, which is why it's 10 times bigger than it realistically should be. But this started out as a 2,000 share position, which would be the equivalent of 20 contracts, basically, right? But I peeled part of them out. I sold one the next day, or I closed out 500 the next day when it dropped off a decent amount. I'm like, it's getting close to support. I'm going to take a quarter of the position out. If you don't scale, try that too. Add risk reward and scaling, and your total mind will absolutely shift. I guarantee you that. Because all of a sudden, it's like, okay, I had 2,000 shares. I'm profitable on it. I take out a quarter of it. I bank profit on 500, a small profit. Now I've got a quarter of the risk out of the way, and I've got some profit. And if it keeps going, I'm still making money. Because you always have that fear factor going, right? Like, well, what if I get out here? If I take the whole thing out and it keeps going, I'm going to be mad because I'm losing profit potential. If I don't get out and it backs up on me, I give back all my profit. Right? Right? You have that fear factor, that the one on each shoulder pulling you back and forth. If you take out part of it, what did you do? You banked some profit. You reduced your risk, not by 25%, by 30 or 40%, because you've got profit now. You've taken 25% risk out of the way, but you've banked a little profit, which actually reduces it more. And then the next day, when it got to that, which is a decent support, I put an order in to buy it back down there. I closed out another 500 shares. So now I've got a half position left. And yesterday it tanked. It's beautiful. I moved the stop down. The original stop was up here at 22.04. I moved the stop down to 19.22. If this thing takes off, runs the upside, it's going to stop me out at 19.22. My entry was 20.47. That's $1. So there's $1,000, $1,200 on that. And I've already banked $700-800, something like that. $2,500 profit on what would have been $5,000 or something like that, whatever it would be with options. Well, we can look actually, because I'm also, that's one thing I've done this year is I'm mimicking it in. So here's an actual options account, a practice account. And you can see there's a whole bunch of, I got 21 working orders. Most of them working orders. There's only, well, there's 8 fills today. PayPal just filled like a couple minutes ago. That's adding to the position. Okay, let me bring the chart up there. So there's PayPal. And this is another thing I'll do, man, I'm running out of time, is I like to nibble on things, because scaling in, if you haven't scaled in, do that. Trust me, it will blow your mind how much more relaxed you get. And this is one example where there's a big difference between, here's an inverted head and shoulders, beautiful textbook pattern, the potentials, that the drawing from the head to the shoulders is what we expect it to move. So I've got the target up here at 75.60. Entry points at 65.37 with a stop at 61.96. So it's about $3 of risk for $10 of potential, 3.5, something like that. But with that big of a range, I like to nibble on it. So I'll pick up a little bit here. And then if it runs up and continues, then I'll add to it, which is what just happened. That's what, I don't know if you heard that little whatever it was in this practice account, just triggered it. 9:50. Yeah, it was 7 minutes ago. So here's the first one. PayPal picked up just 2 contracts at that dash line at 64.25. Picked up 2 contracts at 6:30. Just added 6 more at 6:55. So yeah, I paid 25 cents more for it, but I've also got 4 times as much exposure now. So if this thing continues to run, I'm going to make that much more profit. My cost basis is probably 650. And where's it at right now? I could sell it for 650. So the fact that I got in 2 of them a little bit early, oh, there's my cost basis right there. It shows me. That's right, 648. So I could get out, basically break even at this point, which I'm not going to because the volume's solid. This is a beautiful textbook inverted head and shoulders break. The only thing I don't love about it is we've had 2 massive days to the upside, which I love because there's heavy volume, but it's a really rapid move. But sometimes they just take off and rally like crazy. And if it does, great. If it doesn't, oh well. So I've got, I don't know, how much is that? 650 on 8 contracts. That's about $5,000. So it's essentially a half position. Because the way I work this is $100,000 account, I have a 10% rule. I won't put any more than 10% into any one trade. So I can put up to $10,000 into one of these trades, which I rarely go to the max unless it's really spectacular looking. But because it's already run pretty heavy for 3 days, I'm a little skittish it's going to have a sell-off. People are going to take profits. So I don't want to have 100% risk on there. Plus, if it runs up like this, if it runs up to 68, I'll probably take those 2 out, take a profit. And then if it rolls back down here, then I can reload them. Right? There's all kinds of different ways to do it. But this is the initial process and the plan that I set up. Here's the pattern. Here's the plan. Here's the process. Go in and place the trades, contingent orders. In fact, I need to go do that now. Where's PayPal? So here's my order. So I'm going to close these filled. So here's my order on PayPal. I've got 2. Sell at the market because I don't know how many is going to happen. Oh, I got to get there. 61.96, which is right there, the stop. So this will go back to your question, Tom. I know, how do you use stops? So this is how I do it. You're seeing live and in person. I mean, it's a practice account, but this is what I do in my real account too. Okay. So I've only got a stop on 2 contracts right now. So I got to change this. I got to right click, hit cancel and replace. And then I can click this and it'll allow me to change it. So now I've got to make this 8. Whoops, wrong direction. So I'm going to make that 8. And so I'm going to sell it at the market because I don't know what the option is going to be at when it gets there. So I just do it at the market. And if you're trading options that are liquid, you don't have to worry about it. If there's enough activity on them, if there's enough open interest, enough action, it's not going to be a big difference. I don't worry about it. I want it to be there good till cancel. And then down here, I'm going to submit it if PayPal market is less than 61.96. And you can read it down here. I'm going to replace the current order with 8 62.50 calls. If the security is less than 61.96, I hit save, then I hit confirm. I read it again, sell 8 PayPal, 62.50 calls at the market good till cancel. If it's below 61.96, I hit send. And then I've got 8 PayPals here. They're going to close at the market if PayPal rolls back and hits 61.96. There's how I use my stops, Tom. That's how I set my stops up, and that's how I use them. And if it hits it, it hits it. And if you want to see how this has worked so far this year, there's I don't know if I can highlight that down here in the bottom right corner. $5,100. Well, it just went to 47. That's the profit so far this year. We're not even done with this month, and that's just on the ones that have been here. And you can see I don't know how many there are. Order history: 39 orders, 39 fills. 19 working, 39 fills, 37 canceled. But so that's out of 39 orders and 39. So out of 39 orders, that doesn't mean trades because some of them are closes. So probably 15, 18. And I'll show you the gap, which you saw on the stock one, right? So here is what's happened with the gap so far. Originally bought 20. This is on the 12th. So it's at a week ago, 7 days ago. Bought 20 to open at 234. Sold 5 of them at 291. So what's that? 55 cents, something like that. Call it 50 cents. So bank $250. Sold the other 5 when it hit that one spot. All right, where'd it go? Let's get it on there. So you can see. So there's the day it entered. Bought it right there on that day at 234. Sold 5, a quarter of the position the next day at 291. Banked $250. Sold another 5 when it hit that support level at 375. So that's what, $1.30, almost $1.40 on 5 contracts. So that's $700-800. So that's about $1,000 of bank profit so far. And if we go back to GPS, where's it at right now? We paid $233 for it. It's at 365. So we're still up. What is that, $1.30 on the other 10? So we got another 1,300. So we got 20. Well, yeah, it says right there, 1,310. Duh. Making it more complicated than need be. I mean, it's literally nothing more than just finding a pattern, creating the plan, determining the risk, entering the trade, letting it do its work, letting it do its thing, and then adjusting it as we go. There's a stop. There's a stop here on, getting back to your question, there's GPS. Where is it? Right there. So here's the stop on GPS. Click that. It'll show us at 1922 is where I have the stop right there. So if GPS backs up today and hits 1922, I'll be out of there. It'll close it out. I don't know what it'll sell for, but it's still going to be profitable no matter what. So calm, cool, and collected. I don't care what GPS does. I hope it keeps going down. But if it goes back up, I don't care because I'm still going to have 1,500, 2,000 of profit on that one trade. On what was it, 4,500 to start? So even if I get 1,500 out of it, that's still 30%. And you can see a lot of these, because I just did my research last night. I just did the weekly whispers last night. A lot of these ones that say buy right here are still waiting, right? You can see they're all the green ones are buy orders. They're still waiting. The red ones are sell orders, contingent to say if the stock hits this price, get out. But the ones that have 0 here are all waiting to see if they fill. CFG actually got stopped out this morning. Took a $250 hit on that. WMB also hit, but that was $300 profitable. So those essentially washed each other out. But I have orders on all these. So that if they don't do what I want, I mean, if they do something opposite of what I expect, and if they don't hit, like, I mean, I have an order on Nike out here at 98.77. If it hits it, great. If it doesn't matter. I'm not worried about it. It's just a process. It's like putting employees to work, right? Tell them what to do. Do this, do this. If this happens, do this. If this happens, do this. And if you have 3-to-1 risk reward, there's really nothing to worry about. And that's really, I mean, this account, it's about the same. And that's why I started doing this option, so I could see approximately how close this was. Because last year in this, because this is $1 million, which is using stock. But I love this because it tracks the data. I know, sorry, Lee, I'm just noticing. Cool. You can track the data, see where your net profit is. You can see your profit loss, which again, with the gap, I've closed out 2 winning trades. That's what's skewed about this. It says 65%, but when you scale out, like the gap was 1 trade to get in, and now I'm going to have at least 3 trades to get out, and they're all going to be winners. And it tags each of them as winners. So the gap is going to log 3 winning trades. So this winning percentage is higher than it should be. This realistically is about 40 or 45%, because I would say 8 of these trades are scaled out trades where I took partial profits on it. So if you take 8 out of there and you say say you have 6 winners, 5 or 6 winners and 7 losers. If you have 6 winners and 7 losers, it's 47%. It's less than 50% and still profitable. But that's the one reason I love this system, is because you can go back and see the data. But because we can't trade options with it, because options give you about a 10-to-1 leverage, right? So I had to make it 10 times bigger. But I wanted to see realistically how it works on the option side too, if this is close, and it is. I mean, this is doing the exact same trades, just with options and with actually a $100,000 account, and it's up $5,000, where this is up 7,500. So they're pretty darn close. And this can change real quick when you have actual options, because if one of these stocks moves, the options are high leverage. So this could be at $8,000 in a matter of an hour or two. Just never know. Finish the list. I thought you wanted the Qs and the spiders. Well, this is, I got to shut up. I know I'm over. I don't even know what time it is now, but I know I'm late. Asian United Health. I hope that didn't stop out. Okay, it didn't. Whew. But yeah, and you can see this is where the other trades are at. So here's all the ones that are waiting. And well, those are stops and entry points. I already showed you that, but Fifth Third Bank, this is when they came out with earnings this morning. They gapped up and then started selling off. So I have an order down at the entry point waiting for that. I'm tempted to nibble on it right here, but it's not that much different. So why? Kroger, that's holding that. This holding that support line. If it breaks that, then I'm pretty confident it's dropping off. So I put a stop way above here, an entry point well below those dips. If it hits here, it's probably going down there. PayPal is the one that at this moment is looking spectacular. So hopefully it keeps going. Apple's close to hitting, but then here's some other ones I haven't even placed trades on because they're not really close enough to worry about. Caesar, there's an inverted head and shoulders on Caesars. I haven't put anything in on that. Just watching it, see what happens. Delta, I almost pulled the trigger this morning and it hit 38.25. So you would have missed it by a penny. Those are the frustrating ones, but that's where you got to bounce back, right? DocuSign. This is one that's frustrating. Got into it on the gap down. I moved the stop down and then moved it down when it gapped down this morning or 3 days ago, right there. It gapped down. I moved the stop down to there, ticked it out, and now it's still falling. So this is frustrating, but it is what it is, right? So that's essentially it. I mean, as far as creating your plan and then just trading your plan and adjusting and adapting. And if you focus on the risk, then you should be good. All right, 2 more stocks real quick. AMD, that's blasting off. There's nothing to do on this. I'm always looking for a pattern. At this point, I mean, the odds of it continuing to run to higher are slim. It's already run so far so fast. I would never, ever consider a bullish trade here, but I also wouldn't consider a bearish trade because the momentum is too big to the upside. This will most likely settle down. You look at this run we had right here, and sure, it went one more leg up, but then it took profit, and we danced around here. What's normal after a run like this is for a stock to settle down and relax a little bit. I mean, if you sprinted up a hill as fast as you could, you probably have to catch your breath. I know it's kind of a weird analogy, but it works for my mind. Like, I'm just not going to keep going forever at this pace. Snap. Well, there's a good example right there. You get this huge run right here, 9 to 18. Basically, it doubles in about 2 months. It's dancing around for a month and a half or so. And it needs to do this. It needs to catch its breath. It needs to breathe. It needs to just chill out. So let it be. And it's essentially stuck in this range right now. And I wouldn't trade it until it broke out of one of those. It either breaks out, or if it comes back up here and you think it's going to roll back over, then trade the channel. I'm, for the most part, a breakout trader. So exactly, Jennifer. And I appreciate that comment. And I'm going to close with that. She's great stuff. Always need to be reminded about the 3-to-1 win to loss ratio. And I would love to have gotten to the coin flipping and had a little fun with that. If you, where did that go? If you want to have a little fun, go take a bunch of trades. And if you have the risk reward calculator, then use this. And go flip a coin. And I've got this over here. You just do heads is a win, tails is a loss, whatever you want to do. And then just punch the math out. There's 15, 16 trades here. You can go on to Google and just type in coin flipper. It'll give you a random coin flipper and do a 3-to-1 risk reward. And I've done it here a few times, and some of you have seen it. and you just randomly pick. These are all the trades that I have for this week, or 16 of them at least. I put them all in there, and then just have it do its thing and watch what happens. It'll blow your mind, and then implement that in your trading. All right, Brenda, you got 30 seconds. Qs, big old broadening pattern. It's rallying. There's no trade on that I see right now. Spiders, it was kind of a double top. Oh, we have decided to. Is that breaking out to the all-time highs? I go look at the SPX and the Nasdaq, same thing. Is that's not going to show today's? Is it? I don't know why it doesn't do that. So yeah, it looks like we're at all-time highs on the spider. So have fun, Helen. I don't know why it doesn't update the markets, but yeah. So it looks like the market wants to keep going. But if you're in a weekly whispers, you know the importance of the Russell and why this is one thing that I watch closely. So, but just remember to plan your trade and trade your plan, and focus on the mindset. Make sure your head's straight and everything should be fine. If you put the odds on your side, you got a good solid plan, everything works out just fine. The money will show up once you have that stuff in place. Once you're calm, cool, and collected, and you're working your plan, and you've got your plan modified to where then you'll be just fine. So breathe easy. All right. Thanks for hanging with me. Thanks, Lee, for being patient. Appreciate it. Y'all have a great day and a wonderful weekend, and we will see you on the next go round. Bye-bye for now.